Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISC FX Options Weekly Outlook for November 23rd, 2009. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a chart of our US dollar index. This is a weekly chart, and as we can see here, the US dollar remains bearish against most of the majors. However, the 75 level continues to hold as support. We may be witnessing a bottom in process. However, failure to hold 75 opens the window for further US dollar weakness. Now, the 76-77 focal zone still remains an important overhead resistance. A move into this zone opens the window for a more robust US dollar recovery. Our daily snapshot here reflects the U.S. dollar consolidation down at that 75 support, as well as within some of the key focal zones towards the upside that we're using as our near-term targets. Consolidation above 76 opens the window for a test of these focal zones on the shorter time frame. Well, the U.S. dollar held its ground against the loonie as seen here in the ISC FX options pair value CDD. A break above the 105.5 signaled a push towards our 107, 108 focal zone. However, Friday's close showed some apprehension in continuing. Now, the 105 range now becomes an important support level, a test of which is possible. Failure to hold here may spark a move back down to 104. If we are now witnessing a bigger picture recovery of the U.S. dollar against the Canadian dollar, an extension of this move should actually test into this 110, 112 box. The YUK continued to slip deeper into this 89, 89.5 focal zone. The path of least resistance continues to be down, with a break below this zone likely playing down into this 88 box. We're still looking for a break above that 90 level, being the point at which we would consider targeting this 91.5, 92 focal zone. Well, the U.S. dollar continues to trend down against the euro, as seen here in the ISC FX options pair value CDD. Now, there are some signs that a bottom may be in progress here with another test and subsequent bounce off of the 66.5 focal zone. The 67.5 range does appear to be an important resistance level, and a rejection here could conceivably see another retest of 66.5. If we do happen to break this 67.5 level, 68 is a near-term resistance, so there's not a lot of upside past 67.5. Now, if we do see a push beyond 68, that opens the window up for a more robust U.S. dollar rally against the euro. Next up, the BPX, the U.S. versus the British pound. Now, this 59.5, 60 focal zone remains an important support level, and we have seen a bounce off of that and a subsequent break above this pivot point found here at the 60.5 pair value. Now, this break does suggest the possibility of a move towards the 61, 61.5 focal zone. However, Friday's close on the lows of the day suggests that we should be open to the possibility of a move back down towards 59.5, 60. A break below that opens the window for a possible continuation to the downside that may test this 57 box. A break above 61, as the 61, 61.5 focal zone will have us targeting the 63, 63.5 range in the intermediate term. Let's take a look at the AUX, the US versus the Australian dollar. Now, the trend in force continues to be down. However, the pair value did show some signs of bullishness this past week. Now, the U.S. dollar managed to claw its way back above this 108.5, 109 focal zone against the Australian dollar. However, we did see the pair value close Friday on the lows of the day. Now, 111, 112 focal zone becomes a logical target to the upside. However, this does not mean that the trend in force is changing. It would take a break above 111, 112 in order for us to be a little more bullish with respect to the US dollar against the Australian dollar. If we see the pair value migrate back down and drop below 108.5, 109, then we're going to be looking at a test back down into this 106, 107 box. Let's take a look at a few of our key points. First of all, the US dollar index continues to consolidate and find support above 75. This may be part of the bottoming process. However, the trend still remains down. We need to see it close back above 76 to signal a possible move higher. The CDD traded into our 107, 108 focal zone. Now this is an important resistance level. We may see a push higher into this zone. However, it will be a break above 108 that will lend further credibility to the continuation of an uptrend. The YUK continued to pull back deeper into our 89, 89.5 focal zone. Until we see a definitive break above 90, the path of least resistance appears to be down to retest 88. The EUI retested support. As with last week, it closed above 67.5, signals a break above the trend line and opens the window for a more robust rally for the US dollar. The BPX bounced off the 59.5, 60 focal zone and pushed higher. This week's break of 60.5 could signal a continuation. However, we want to see this level hold as support. The AUX plunged deeper into the 106, 107 focal zone before reversing. The US dollar gained some ground this week. However, we need to see support at the 108.5, 109 hold to be confident in a continuation towards the 111, 112 box. And this has been your ISC FX Options Weekly Outlook for November 23rd, 2009. As always, I'm Jason Ayres. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.